investment you want to go into, you should be able to ask yourself, what exactly do I need from this investment? We have the 3 C's of investments, and that's what we want to talk about in this video, and it is the investments for all seasons. But the one that will ask yourself, what do I intend to gain from these investments? If it is short term, if it is medium term, if it is for long term. So quickly we'll look at the 4 baskets behind me and what is it. So number 1 basket, whenever you want to invest, is to ask yourself, am I expecting cash flow? When I say cash flow, it means the investment pays you regularly. And when I say regularly, I mean annually, semi-annually, or quarterly. So when you say annually, for instance, you know the people that usually have rental property, how often do they collect rents? They collect rents yearly. So when they are building the rental property, they already have the mindset that their rental property will be giving them yearly income. Annual income. So it is once in a year, unlike the people who have rental property in the US, in the UK, where they pay monthly. But in a place like Nigeria, it is paid yearly. Although I think there's an advocacy for monthly payment of rent. So when you need cash flow, it majorly means you want to use it to complement your active income. You want to use it to complement. You want something to complement your active income. Let's say, for instance, yearly your active income, let's say you are generating 10 million naira, but you know that you need a minimum of, let's say, 1 million naira per month, which makes it 12 million naira. So in that case, you will need a passive income that will be giving you at least 2 million naira in interest or in return yearly. Now, so if that is going to be your aim, which means you can go for an investment like treasury bills. You can go for an investment like fixed deposits. You can go for an investment like rental properties. You can go for an investment like dividend paying stocks when it is yearly, because there are some dividend stocks that pays yearly and most of them pays yearly. That is for annual. So the moment you deploy your capital, let's say for instance you are putting in 5 million naira, you are telling yourself, okay, I need cash flow from this, but it's going to be an annual thing. Now, that is talking about the frequency at which you are receiving your interests, your returns. Now, you could say, I want it semi-annually, which means you have to look for an investment vehicle, an instrument that pays twice in a year. So which means you will not go for treasury bills. Treasury bills only pays once in a year, except maybe you want to do the 181 days and you want to repeat it the moment it matures. But I won't advise that, because the interest rate on the 181 days is usually lower than the one of 364 days. So the best thing is just for you to look for an instrument that pays twice in a year. If you are looking for cash flow that will return twice in a year. So in such a case, you can go for FGN bonds. You know, FGN bonds is different from FGN savings bond. So you can go for FGN bonds. FGN bonds pays twice a year. You earn interest twice a year. You can go for dividend paying stocks that pays twice in a year, that pays dividend twice in a year. For instance, some of our banks pays twice in a year. The likes of GTCO, the likes of Zenith Bank, the likes of Okomu Oil, the likes of Presco pays twice in a year. They declare what we call interim dividend and they declare final dividend. However, this is still incumbent on whether they make profit or not. Dividend is not automatic. If they are making losses, there is no way they will pay dividend. That was what happened to MTN last year. MTN did not pay dividend for year 2024, financial year 2024. Why? They did not make profits. They declared a loss because of the loss of foreign exchange. So I hope you got my point. Even though it's a blue chip company, but it couldn't pay dividend because it's made a loss in the year for the year 2024. So also note that. Then if you are looking for cash flow quarterly, the investment that will give you cash flow quarterly, you can go for FGN savings bond. It gives you cash flow quarterly. They pay you interest every 3 months. So now, depending on your frequency, on the frequency at which you want this return, it will help you to determine the kind of vehicle you should pick. You don't want an investment that will be giving you cash flow quarterly and you go and pick, let's say, you go and pick rental properties. Or maybe you go and pick fixed deposits. No. So you need the right assets, right instrument for the right investment objective. So if it is cash flow quarterly, then go for AGS savings bond. Go for money market fund. Money market funds, your money accrue even though daily, but at least you can withdraw it quarterly. That's if you don't want it to do the magic, which I will be talking about in the last basket. So you can go for MMF. You can go for mutual funds. So mutual funds also accumulate every quarter. You can decide to withdraw your interest every quarter. Then the last but not the least is dividend paying stocks as well. So one thing you can see that is common with this is dividend paying stocks is present in the three. So when you are going for dividend paying stocks, look for the one that suits your investment objective. So for instance, if you know you want a regular cash flow and invest in dividend paying stocks that pay you, that will give you regular cash flow, that means you have to go for, in Nigeria, you can go for US stocks. We have many US stocks that pays quarterly. But if you are looking at Nigeria, it is only NIDF and Seplat that pays quarterly every 3 months. That's for cash flow. Then we have investment that will give you capital appreciation. Capital appreciation simply means you invest 100,000 naira, then your 100,000 naira appreciate to 200,000 or 300,000. It increases, it appreciates by a particular percentage. So that is what we call capital appreciation, or we call it capital gain. You have capital gain. And from 2026, you need to be aware the tax on this. You need to be aware of the tax of this. Government is taking the tax on capital gain seriously from 2026. So be aware of that. So when you are looking for capital appreciation, what are the instruments to look at? What are the investments to look at? You look for penny stocks. One of the advantage of penny stocks is that they have their potential to surge, to go up. And don't forget, the same way they go up, they can also come down. They can also go down by the same percentage. So that's why we believe that penny stocks, investing in penny stocks, is somewhat risky. Except you have done your analysis, you have done your maybe fundamental analysis, especially if you are investing in it for long term. Number 2 is growth stocks. Growth stocks also have the potential to increase in value, to increase your capital. Value stocks is number 3. If you want to know about all this, I think I've mentioned it in the NSI, in the Nigerian Stock and Shares Investment 1.0. Land flipping. You want capital appreciation, especially for short term, then you can go for land flipping. Land banking is another one. Land banking also makes your capital to appreciate. You invest 5 million naira, and your 5 million naira in the next 3 years, in the next 5 years, that land has become 10 million naira or 15 million naira. Then digital assets. When I say digital assets, a major part of digital assets is cryptocurrency. But you need to know more very well. You need to know this before you invest in it. For instance, as at the time of making this video, they are down. The cryptocurrency is generally down. So you need to be aware that this is a high risk investment. Make sure you seek knowledge before you venture into it. Then the last but not the least is commodities. For instance, you buy gold. You buy gold, you buy metals, you buy artifacts. So that's for commodities. They appreciate in value. The gold you are buying for, let's say, 5 million naira today, in the next 10 years will not be 5 million naira. Possibly, at least to an extent, it would have appreciated. Then, number 3 is the kind of investment that gives you both cash flow and capital appreciation. So it combines both. It combines both cash flow and capital appreciation, and that's where some wealthy people love to play their game. So when you see somebody going for rental properties, it is not just because of the rents, it is also because of the capital appreciation on the property. Can you imagine somebody who builds a house in Ikeja? 10 years ago, what would it have become by now? It is not just the rent he collected that he has been collecting from the property. The property has appreciated. So when you see people investing in rental property, it is not only for the cash flow, the rental income, it is also for capital appreciation, especially if you have a good location. That's rental property. Then you go for stocks, especially value stocks that pays dividend. Value stocks that pays dividend. Blue chip stocks that pay dividend. So value stocks means it has the potential to grow. It is currently undervalued. Currently undervalued. If you ask me, such stocks in Nigerian stock markets now, for instance, to me, Zenith Bank is a value stock because I believe that it has the potential to do more than what it's doing now. And one thing about Zenith is that Zenith pays dividend. I hope you get my point. So let's go on. Then commercial properties. Commercial properties also gives you capital appreciation and cash flow. Major difference between rental properties and commercial properties is that commercial property, the frequency of cash flow from commercial properties is higher than rental property. Most rental properties is yearly, while for commercial properties like owning an event center, like owning a warehouse that you operate yourself, they give you frequent cash flow. Then the last but not the least is the one, what we call the eighth wonder of the world. It is majorly suitable for long term. You give it time. That is what we call compound interest investments. Example is money market fund. That is if you don't withdraw your money, you don't eat your seed, you allow it to compound and you see your money doing wonders for you in 20 years, in 25 years. This is good for retirement. So money market fund and mutual funds, you allow your interest that is to be paid to you quarterly, you allow it to compound so you don't eat your seed. I hope you get my point. When you want to invest for retirement, always consider compound interest investments. Consider this kind of investments. These last two. These two are good, these ones two are good, but especially cash flow and compound interest. I hope you understand. If you are yet to subscribe to this channel, kindly do by clicking on the subscribe button, click on the notification bell so you can be notified whenever we release any video. So we meet in our next video. Stay blessed.